Buenos dias, good morning everybody, and thank you very much for coming. For the next half hour, I have the honor of speaking to one of Spain's leading luminaries and bankers, Mr. Francisco González, who is the executive chairman of BBVA. And as well as being a very savvy banker, he actually started his career in technology, which makes him the perfect guest to have here with us this morning. Thank you. It's not an exaggeration to say that technology today is permeating society in every single way. Banks are no exception. Large companies like Google, Facebook, Amazon, Apple are in our lives daily. I imagine that you might fear an Amazon bank starting next week, perhaps?
Is that a question?
That's the question.
Not really today, not really. There are 20,000 banks in the world. Most banks won't be able to face to the new world. I mean, what the exponential technologies are posing to everybody, to every sector, and most banks will disappear. But in the banking sector, we have regulators. So regulators will be there for a while because money has to be regulated by default, and regulators will in some way mark the pace of change. I mean, can hold back or speed up the process. That is a very interesting thing, and I probably will elaborate on that later on. But my view is that there are too many banks in the world. They won't be able to compete. Over time, we will see, instead of 20,000, we will see probably thousands, in 10 years, hundreds, and 15, 20 years, dozens. That is the trend of the sector. That means that there will be a new league of competitors, and that league of competitors will be made up by BBVA, hopefully. Other few banks, not many. Some startups. Most startups will go bust, but some of them can be successful. And if you are successful in the net, you can be extremely successful. And going back to your question, some giants of the net, Amazon, Google, I don't know, but they will definitely be our competitors. For the time being, they are on the fringes of the banking sector because probably they have a lot of food on the plate. They don't want to be regulated, but it's a question of time. Those guys will be part of the ecosystem.
So what does BBVA do to ensure that it is one of the 20 that survives to 2030?
That's the question. We have been working in what we call the long digital journey for a while. I mean, for 10 years now, working. I'm making a lot of mistakes, by the way. But we started building up the platforms, the IT platforms, both hardware and software. 5 years later, in 2001, 2011, 12, we realized that our people were working on the IT platforms, I mean the Ferrari, but they didn't work on the engineers, the drivers, the roads, the signals. I mean, we started with I would say an approach which was too technical. We didn't understand at the beginning of this long digital journey that the approach should be holistic, looking at the entire banking value chain. So in 2012, we replaced our management system, management structure, and we appointed new people, and we realized that we needed to bring digital people into our manpower, and to create I would say a new sort of professionals, new breed of professionals, blending digitals and bankers. Over the last 3 years, we have advanced very much in terms of trying to turn the bank into a digital house. That was our vision back in the day. Turn the bank into a digital house, software house, whatever you call it, in order to be able to compete with the new guys. Our benchmark are not the conventional banks. For us, conventional banks don't exist in terms of future competitors. Our benchmark are the Googles, the Amazons, and those guys. So we are are going that direction, and we have a management structure which is made up of engineers, bankers, data scientists, big data specialists, all those guys who understand should we treat our customers. So we want to be as efficient as Amazon. I have to admit that regulation is very important, and regulation is helping us, to go in that direction, because for the time being, Amazon is not a threat, but it's going to be a threat. So we have to be as efficient as those guys, and I think we can do it because our experience is giving us a lot of data. We, of course, are delivering, a lot of services through the net. By the way, our banking app has been awarded by Forrester as the best app in the world, and that app is upgraded every 3 months. So, of course, we work with Agile, with Scrums, with DevOps, all those techniques in order to have these sort of services.
So you touched on something which I think is very interesting there, which is the new people that you've brought into the bank in the last 4 or 5 years.
Yeah.
How do you think the sort of new wave of banking, maybe retail, whatever it might be, is going to change the future of work, the future of skills? I mean, I'm assuming that the sort of person you were hiring 10 years ago is very now is very different
Totally
from
different.
10 years ago.
This is probably, there are a lot of challenges, trying to turn an incumbent into a newcomer. A lot of challenges. Probably that challenge people is the most important. And at the beginning for us was terrible, because we have to get rid of many good professionals, good bankers who didn't understand, the entire journey. So we were forced to bring new people. Now we have reached a critical mass where we are seeing that people who in the past probably didn't think to work with a bank, now they are eager to get into the BBVA ecosystem. So it's a long process. You have to bring people to adapt, to teach them the banking regulation, blending engineers with bankers. It's a long process.
So do you find it difficult to find people to hire? Are people prepared, or you're saying you have to do quite a lot of training in-house once they're on board?
You have different levels of people. So in our ecosystem, you need the best people, the best of the best, and it's very difficult. We were very fortunate to start our journey back in the day, and over time we brought people into the bank, and we have created, as I said before, a critical mass where people wants to work with good people. So if you have the critical mass as we have today, it's far easier for us to bring people into our ecosystem. Comparing with the conventional banks, most good people want to work with BBVA, not with other banks, because other banks are talking about digital strategy, but they don't have the critical mass we have. If we want to compete with Google and Amazon, and that's what we want to do, it's a little more difficult. And it's going to take time for us to have the same level of excellence that those guys, Amazon and Google, have today. But what we are creating is a new business model, which we will be not a bank, a house where we will advise our customers, trying to help them to conduct their financial life, another part of their lives. And I think we have a couple of assets which the new guys, the Amazons and those guys don't have. For example, privacy, security, regulation. Regulation is really a hurdle for those guys, because you have to get used to working with regulators. You have to spend a lot of money, and you have to have experience. And we have all those assets, and the new guys don't. So I think we have a couple of assets which I hope BBVA will be part of the system in the future. But we have to prove that.
Well, it sounds like you're on the right path. Anyway, let's go back to the app, the award-winning app. That means that you're changing the face of how you're interacting with your customer.
Yeah.
Do you want to tell me a little bit more about that?
Yeah. We had a physical model where banks went to the branch and, and we attended those customers with a physical infrastructure. And little by little, over the last years, we are moving our retail or distribution model based, of course, still on branches, but more and more on mobiles and iPads and that stuff. We have 40% worldwide of our customer base in the digital world. 40%. It's a lot in comparison with other banks. 23% plus of our sales are done through digital channels without human intervention. And that figure is growing at a rate of between 20% in the digital channels and 40% in the mobile channel. So more and more we are attending our customers through mobile. Those customers are extremely happy. Why? Because the pain points come up where there are human intervention. Mm-hmm. When you go to a branch, sometimes you're happy because you have a good service, but the next day there's a long line. The next day our employees are not empathetic enough, So what we are learning is the more our customers work with our infrastructures, supposedly our infrastructure work well, and they work well, the customer satisfaction is going up. In fact, and we have the number one in many countries because of the digital channels. So we are giving our customers the opportunity to work in the digital world, and they are eager to get into this world. Our costs are going down, the source of revenues are going up, and we are able to have customers happier, and we are earning more money with those customers. But this is a gradual process because we still have the branches. Of course, we are reducing the branches little by little, and we are in some way creating a new bank and in some way getting rid of the legacies.
So how do you make sure that you don't leave customers behind? My father, for example, does not do mobile banking. How do you continue to service him?
That's very interesting because, of course, we have a lot of experience and a lot of data, and that is a big asset within BBVA. For example, in some part of Spain, we had 32 branches, and we set up a model to slash that number by 1/3. More or less, we closed down 11 branches in one day. And what happened in that area? 50% of the customers happy. They went to other branch, and they have the mobile, happy. 25% not so happy. They say, okay, I have to change, but they are ready to change because we are, of course, teaching our customers. 25 say, no, I want to go to the branch. And we are learning. The more data we have, the more smart we will be in terms of taking decisions. And at the end of the day, you have to attend your customers, but your customers have to attend the bank as well. I mean, this is a reciprocity. So if you give a service, you have to charge for that service. So there will be a huge amount of, I would say, different models. Some people will go to the branch. They will have to pay for that. Some people have, and we have developed an incredible business model, which is a hybrid, remote assistance. People don't go to the branch, but they have a personal assistant. They know even his name, and they talk or they chat, but they are not going to the branch anymore. So there are different models, different circumstances, but we advance in the digital world.
I find it very interesting, this idea of customer education.
Customer education is very important.
Yeah, you were also telling me about the app that essentially is educating me in my spending habits and alerting me to maybe savings that I need to make now because I've got a big bill coming up. I found that fascinating as well. How does that work?
The app?
Yeah.
Well, the app is incredible, frankly. It's the best in the world, according to Forrester. Why do we have such an app? It's not one day, years of failures or so. The most important thing is when we adopted Agile 4 years ago, and Scrums, small teams which works in a completely different way, and DevOps. There are a huge amount of new techniques. Those guys have the mission to upgrade that app every 3 months. Every 3 months, they have to deliver new functionalities. And it's incredible how those guys are working and imagining new products. The latest upgrade was launched 1 week ago. It's called the Economy. 1 million people have unloaded that functionality in 1 week, 10 days. And that functionality is one step forward. That functionality is not selling anything. It's just advising, giving the customers data in order to conduct their financial life in a better way. And that functionality predicts his cash flows, gives information about if you spend tonight $200 in a bottle of wine, you won't pay the mortgage 20 days from now. We are giving our customers a huge amount of information because our business model is evolving in that direction. We don't want to be the seller of products. We want to be the advisor of our customers. And that is within our purpose to help people, to bring the opportunities of the new era to everyone. What does it mean? It means that we are building up platforms in the cloud worldwide. We will pick up the best products and services wherever they are. They will be within the ecosystem, not within BBVA. We can be the best innovators in the world. Forget it. What we can do is to pick up the products, to assemble them into specific products and needs for our customers, specific needs and products. And for big data and AI, we can give them the products. If we go in that direction, and we are going that direction, we don't have a conflict of interest because we won't produce products. We won't just choose the best products for our customers. And that is the platform we are creating. And those platforms will be, there will be few platforms like BBVA in the world. Probably Amazon is going to be there as well. Yeah. But it's a very daunting task, and it's out of reach of many, many banks today.
So as you become a banking platform, and you therefore rely far more on our data, customer data, and algorithms, is there a fear that the algorithms start to make decisions that aren't profitable for the bank?
It's possible, but we will try not to make those mistakes because we elaborate algorithms and we launch those algorithms within the products, testing the reliability of those algorithms, and we have beta testing, we have trial and errors. Okay, it's an ongoing process, and of course we have human beings, engineers and mathematicians and people who control, how the algorithm is working with our customers. It's a tweaking or a tuning process. Hopefully we won't make many mistakes, rather the opposite. If we have good algorithms and we work in that direction, we will give the opportunity to work with a bank to many people who today is impossible because costs are very high. We are reducing the barrier of entry for many customers which are low income, and we can deliver products at very low cost. So I think that is good news for everybody.
So to your point that regulators today are helping you, as it were, in that they make it hard for incumbents to break into your sector, how do regulators keep up with your model of banking, your new platform, the fact that everything is going digital, data-based, etc., and is probably much harder to keep up with the speed at which things are changing?
It's a very important point. Today we have a meeting which is the digital regulation. I personally attend that meeting. We spent 2 hours with several people just working on that issue this morning. It's very difficult because people don't want to change by default, by nature. Regulators are people, so they don't want to change, and they control. They had and they still have I would say, a comfortable life because they have, they pull the strings and they call the shots. Now, there's a new world emerging, and they know that that world is going to change his function, his job. And now they are quite open to talk to, basically with us, because we are the only bank in the world able to talk to them and to give information. We prepare seminars, and we have a huge amount of people working with regulators. And they are open to our ideas. The problem is to write down the rules. And that is completely different. So they are trying to write down some rules. For example, in Europe, we will have the new data law, which allows third parties to get into our database with the consent of their customers and to extract value. That is going to be a big revolution for the banking system in Europe, not in the States, but for the time in Europe. So regulators try to advance something, but they are asking a huge amount of questions about things which should be understood by them in the past. For example, they want to see the computers. But the computers are not here anymore. The cloud, this is the cloud. What's the cloud? Okay, we have to teach them how the cloud works. There's a huge amount of, a big gap today in what we are doing and what the regulators know. So our task is to narrow that gap in order to have a more fluent conversation and to teach them that they have to change, and they are ready to change. But it's going to be a long, long battle. For us, our position is we love competition. Competition helps you if you are ready to compete. Otherwise, you'll sleep a little bit. But we want to have a level playing field. You have to protect consumers. You have to protect financial stability, privacy, security. But you can't stifle innovation. So you have to reach an equilibrium in order to have a level playing field. It's not easy. So we have to work a lot with politicians, lawmakers, and regulators in order to have a real world where you reach a trade-off between innovation and, I would say, protection.
Now, you sit at the top of an international bank, a global bank. We have a probably very global audience here. How do you see the difference between traditional European markets and then the more innovative, maybe emerging markets, particularly Latin America, where you spend a lot of time?
Generally speaking, emerging markets are far better prepared than developed markets to change. Because you know why? Why? Because they have nothing, and they get the state-of-the-art technology. If you go to Kenya, you have the most advanced remittance system in the world because they have nothing and they use the mobile to do so. If you go to China, you have Alibaba. Everybody knows what Alibaba does, but Alibaba now is one of the main banks, the main competitors in China, because payments, for example, in China is made through mobile. Why doesn't that happen in Europe? Because we have cards, credit cards. So we are a little slow to take innovation because we are more or less served by the banking system. So emerging markets are really have a big opportunity. In our system, BBVA system, we have Guarantee. It's the third bank. It's the most advanced bank in the world, not just it's the best bank of our BBVA ecosystem. They have 50% of their clientele working in digital. If you get into a Guarantee branch, you see no papers at all. When you get into the bank, if you carry some sort of mobile whatsoever, employees know who you are, and they serve you better than others because one are customers, others are not. It's an incredible bank, and it's in Turkey. So emerging markets have a huge opportunity to make headway in this regard.
So as we've all gone digital, now that we are all digital, how worried should we be about cybersecurity and breaches in that regard? Is there a way of protecting ourselves that we're not doing yet?
Cybersecurity is the main threat we have to attend. It's the main. I was in Israel 10 days ago, and I spent 2 days just visiting startups specialized in cybersecurity. You know why Israel is a specific place? Because they are forced to be very smart from the beginning. And because of the army structure, there are a lot of people working in cybersecurity. It's the main threat, definitely. But you have to live. You have to get used to living in such a sort of environment. I presume that when the first cars started to go down the road, there was some accidents, and some people said, okay, stop those cars. Other people said, no, limit the damage. And this is the same with digital. We have to get used to living in that environment. We, of course, are spending a huge amount of money in cybersecurity. And now we are again in the number reshuffling our management team in cybersecurity again and again, and the people who works in other parts of the world. We know that we will be breached. We are attacked every day, of course. For the time being, cross fingers, we haven't been breached in a material way. We will be breached sometime. So we have drills, and we try to prepare ourselves physically and mentally for that moment. Our strategy is, okay, we will be breached, try to limit the damage. That's the main point. The most important thing in cyber attacks is that they get into your system and they are dormant for a while, and they can be 2 or 3 months, and they start to know you exactly what you are doing, and they start to extract information capability that you don't realize what is happening. Remember Equifax, what happened in the States. So you have to be prepared in order to know when you are breached and to detect that you have been breached. And okay, I don't want to elaborate on that because it's going to take me hours. But now that world is changing very much. In the past, we were just passively waiting for being breached. Now we are more reactive, putting poissons and going out of the city. Because I'm city, I mean, we have the walls and and we are going to the bars in order to see who will be the next enemy. So very actively working in that regard. So it's part of our life. We have to accept that the danger is there. Of course, authorities have a lot of work to do in that regard because cybersecurity is a new risk, as probably wars were in the past. And what happened? Nations created NATO, are creating international bodies in order to be protected. We need to see some sort of bodies being created in the future.
So it's time, I think, for the last question. There might be one of the future 20 banks that are still around in 30 years' time sitting in the audience. What advice would you give to a fintech startup today?
To the banks?
Yeah, well, no, to a startup, one of the hopeful future players.
Yeah, I love startups because if you look for innovation, look at the startups. Innovation, and we have our own startups created within the bank. We have bought several startups all over the world. We have new banks. We have a lot of things in that ecosystem, and we are very active. We have a hub in San Francisco. We'll create a couple of more hubs in other parts of the world. We are very active for many years, not for months. So the world of startup is absolutely necessary for the mankind, for everybody. I said before, most will go bust. It's inevitable. But that's life. That's life. We will be startups for us will be incredible partners, and we will work with them forever. I said before, we will pick up the best products also within that ecosystem. We won't produce products in the future, so we will partner with them. And some of the startups will be extremely successful. But the digital world means, by nature, a reduced number of players. There is no place for everybody, because it's a global world where you have to be the best. Otherwise, you won't compete. In the past, people could compete not being really good because they didn't have competition. But now competition is very transparent.
Yes, I think the audience knows that. Thank you very much. It's been a fascinating conversation.
Thank you.